Just like freelancers need to track their income and expenses, homeowners also need to keep detailed records, especially when it comes to those exciting but sometimes pricey home improvement projects. In this scenario, we're focusing on a homeowner who's been diligently updating their property over several years. Think kitchen remodels, bathroom upgrades, maybe even adding a deck. They've invested time, effort, and money into these projects, but now they're facing a bit of a record-keeping puzzle. They're not entirely sure which of these expenses can actually be used to adjust their cost basis. That's the original price of the house plus improvements, and how these records will affect their capital gains tax if they decide to sell down the line. Sam, can you help us unpack this? Let's start with the basics. Which home improvement expenses are considered capital improvements for tax purposes?
Capital improvements are renovations that add value to your home, prolong its life, or adapt it to new uses. Think of things like a new roof, replacing windows, adding a room, or installing a new HVAC system. These are different from repairs, which are generally for maintenance, like fixing a leaky faucet or patching a hole in the wall. Repairs are typically deductible in the year they're incurred, while capital improvements increase your cost basis.
So if I understand correctly, replacing my old, drafty windows counts as a capital improvement, but fixing a cracked window pane is just a repair?
Exactly.
That's a great clarification, Taylor. Now, how can homeowners effectively track and document these renovation expenses?
The key is detailed record keeping. Keep every receipt, invoice, contract, and even canceled check related to your renovations. Include details like the date of the work, description of the project, and the contractor's information. Digital tools like spreadsheets or dedicated home improvement apps can make this much easier.
This reminds me of what we discussed about freelancers using apps. It seems like good organization is crucial no matter what your tax situation is. What about taking pictures of the work as it progresses? Would that be helpful?
Absolutely. Visual documentation can be very valuable, especially for larger projects.
Excellent point. Now, for the long game, how long should homeowners keep these records?
According to the IRS, you should keep records related to property until the period of limitations expires for the year in which you sell the property. This is generally 3 years after the sale. But there are exceptions, as detailed in the article we've linked in the show notes. However, because these improvements affect your cost basis, which carries over from year to year, it's often wisest to keep these records indefinitely, or at least until you sell the property and are sure you won't need them again.
So to recap, capital improvements increase your cost basis, impacting your capital gains when you sell. Meticulous record keeping is vital, and digital tools can help. And remember to hold on to those records, potentially indefinitely, to avoid headaches down the line. Gather all your receipts and invoices related to home renovations. Don't wait until you're ready to sell. And most importantly, consult with a tax advisor. They can help you understand how these expenses affect your specific situation and help you minimize your tax liability when you eventually sell your home.